Okay, now uh, we are continuing with the strategic management, accounting, and retail. One of the core tools in traditional management accounting is variance analysis, which involves setting standard costs. One problem with this approach is that using historical information for standard setting without considering what other organization achieved may lead to insufficiently challenging standards. Another challenge is that for standards to be effective, their underlying assumptions should be grounded in what the market conditions are supposed to be like in the future. Looking historically for the standard setting process may lead to inadequate standards being developed. So, benchmarking provides a solution to this. It involves a comparison of the performance of an organization against other organization. It is also called best in class process or functional benchmarking, and its focus is external. So, what is benchmarking? A process used in management, particularly strategic management, in which organizations evaluate various aspects of their operations of their operations to best practice. Usually within their sector, this allows organizations to develop plans to adopt best practices to improve performance. Right now, sorry for the interruption. Uh, it was due to the internet connectivity. Type of benchmarking we were discussing, right? And we have various types of benchmarking. One of those is industry benchmarking. So, industry benchmarking means comparing performance against organizations in the same industry. Same issue right now. So sorry for that. And here we go. For the categories and what are those categories? One is competitive benchmarking. Okay. Comparing performance with competitors. Okay, this was pioneered and it was pioneered by Xerox when Japanese competitors sold copies into the US at less than Xerox manufacturing cost, costing competitors as they will not wish to share such information. And then we have another type of, that is non-competitive benchmarking. Non-competitive benchmarking, comparing performance against an organization that is in the same industry. That is in the same industry, but not considered to be a competitor. Perhaps because they operate in different geographical locations or different market segments. Okay. They operate in different geographical locations or different market segment. Now, what are the advantages? Well, firstly, it enables the organization to establish the gap between their own performance between their own performance and those of others. Those of others in the same industry group. Another one, it enables the organization to learn from the best practice in the industry. Now, what is the disadvantages? It may be difficult to obtain information Information, particularly from competitors. From competitors who will not wish to share information with the organization. Okay. Next is comparison may be difficult. Due to difference between the two organizations. Okay, now internal or benchmarking. Okay, internal benchmarking, also known as functional benchmarking. Internal benchmarking means comparing one operating unit or function, similar functions in the same organization in order to establish best practice. For example, comparing the accounting function in one country with that of the same organization in another country. Comparing accounting function of one country with accounting function of other country. Okay. Now, again, we will look at some advantages and disadvantages. So, advantages now. It is easy to obtain the information as it's come from the internal sources. It is easy to obtain information as it comes from internal sources. Internal departments are more likely to help other internal departments to learn about how best practices achieved. Are more likely to help other internal departments to learn about how best practices achieved. Okay, now the disadvantage. It may lead to less challenging benchmarks. The fact that the best performing department, where the fact that best performing department may still be performing way below that of competitors. Would not be identified. Okay. Next is process benchmarking, and this is also known as best in class benchmarking. Best in class benchmarking. Best in class benchmarking means comparing the performance of a particular business of a particular business process against that of the organization. That is the best at performing. At performing that process or function. So this best in class may operate in an entirely different industry or sector as well. Benchmarking in the public sector will be discussed later on, right? So I hope you get it till here. Now, once again, we have some advantages and disadvantages. So, what are the advantages? Oh, sorry, not cross. It provides the opportunity to learn how to perform a process or activity well. Okay, it provides the opportunity to learn how to perform a process or activity well. It may enable the organization to overtake competitors as the competitor is not in the same industry. It may enable the organization to overtake competitors as the competitor is not in same industry. One more. The best in class may not be a competitor. May not be a competitor, so will be more willing to participate in the exercise. Okay. Disadvantages now. Difference in the nature of the two organizations. In the nature of the two organizations. may make comparison of the business process more difficult and subjective. And large difference in performance between the organization and the benchmark may lead to demotivation. Large differences in performance between the organization and the benchmark may lead to demotivation, right? So far, so good, and I hope you are getting till here, right? Now we have seven stages in the benchmarking project. So let us discuss the stages. 11 stages and benchmarking project. Planning and organization. Number one, planning and, and organize, setting up steering group. Steering group and setting aims and objectives. Okay. Next step or the next stage is identifying key internal processes for analysis. Key internal processes for analysis. Number three, oh, not number three, actually, sorry. It's second stage, which is continue. That is identifying key internal processes for analysis, practice, steps in a process, metrics, and what metrics that is, measures of times, and outcomes. Example, cost, quality, speed. Speed and reliability. Researching potential partners. Now, the third stage, researching potential partners, though preserve, perceived to be the best, collecting information and investigating metrics for comparison. Okay, so researching potential partners, those perceived to be the best, collecting information and investigating. Investigating metrics for comparison. Next is making agreements and developing plans for exchange visits, formulating a common program for internal data collection and its presentation and analysis, and developing plans for exchange visits, formulating a common program, for internal data, sorry, for internal data collection, internal data collection, and its presentation and analysis. Benchmarking teams visiting sites to collect data and ensure comparability. Visiting sites uh, to, col- to collect data and ensure comparability. Analyzing data and developing plans for improvements. That's our sixth stage. and developing plans for improvements, and finally, implementation and monitoring. So far, so good. I hope it's clear to here. Now, as far as the identifying processes is concerned, rather than trying to benchmark all processes that an organization performs at one time, it is a wisest to start by it is wisest to start by identifying those processes where the largest savings could be made. This may be one on which a higher portion of the budget is spent, or processes which are underperforming significantly. This may be the one on which a higher portion of budget is spent, or the processes which are underperforming significantly. So, as far as the you know identifying partners is concerned, for industry benchmarking, right? For industry benchmarking, using a similar organization in terms of objectives and size can make the comparison easier. Using a similar organization in terms of objectives and size can make the comparison easier. Okay. It is not necessary then to take into account differences between the two organizations, and it should be easier to adopt the practices of the benchmark if they are similar. For example, a school might use a similar school in a different area as a comparator. Okay. Right. Next, selecting metrics. The appropriate metrics depend on the objectives, depends on the objective of the benchmarking process. If the objective is to achieve efficiency metrics such as labor efficiency or total cost for a particular function as a percentage of income might be used. Okay, or if the organization is focusing on differentiation, many of the metrics used would be of a qualitative nature. Example, client satisfaction, quality of service. So it is difficult to measure this directly due to their subjectivity. Okay, so what I just said is, if the objective is to achieve efficiency, metrics such as labor efficiency or total cost for a particular function as a percentage of income might be used. If the organization is focusing on differentiation, focusing on differentiation. Many of the metrics used would be of a qualitative nature. Example, client satisfaction or quality of service. Or quality of service. Okay, it is difficult to measure these directly due to their subjectivity. So, in attempting to find relevant metrics, benchmarking exercises carried out in the past by similar organizations can be a useful source. Much information about these is available in accounting and business journals and online or by contacting organizations that have already performed a benchmarking exercise. Right? So far, so good. And I'm hoping that it's clear to you all, right? And we are moving towards the end of this chapter, of this area. So be with me, folks. Effect on performance. So benchmarking should lead to improvements. Should lead to improvements in performance because it provides the opportunity it provides the opportunity to learn from other organizations practices. Where a gap is identified, this should provide an incentive to spur the organization on to improving the underlying performance. Um, Potential. What are the potential problems with benchmarking? So, uh, one of the problem is fixation. Where organizations take action to improve the reported metrics without improving the underlying performance. Where organizations take action to improve reported metrics without improving the underlying performance. Then we have uh, uh, another problem, that is tunnel vision. Tunnel vision, where organizations focus only on the metrics at the expense of other important targets that are not measured. Where organization focus on the metrics at the expense of other important targets that are not measured. Right? So, so far, so good. And we are done with the strategic management accounting. Make sure you understand this uh, concepts, these areas, especially as I said at the start of benchmarking, that it is one of the favorite areas of examiner, right? Like that, besides benchmarking from this areas, examiner often tests this Boston consulting group matrix. Okay, also differentiation and cost leadership is often tested by the examiner, and other concepts of strategies such as CSS, KPIs are the regularly tested topics. Often, examiner do test this 4 to 5 forces and Pascal as well. So make sure that you know these concepts on your fingertips, right? That's it for this class, and I will see you around in the next class very soon. Till then, take care and bye bye.